Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Emmanuel Dowdall. He is the vice president of the North American region with IDA Ireland, and we're going to discuss Brexit, the EU, and the business outlook for Ireland. Thank you so much, as always, for joining us at MarketSite. Now, there's some exciting news here. IDA Ireland, you're celebrating your 70th anniversary. Tell us more about it.
Well, back in 1949, Ireland was an extremely young country and a very agrarian or agriculture dependent economy. A very young country, only in existence. Actually, we only signed our first constitution in 1937. Just gives a little bit of context of the distance we've come as an economy. When you look at it today, nearly 70% of our exports are driven by foreign direct investment.
Well, 2018, it was another record-breaking year for attracting business to Ireland. Why does that continue to be the case?
Well, I think what you have to look at is the consistency of the policy and vision of the Irish government. There's a very central theme to it, which is very much a welcoming, opening attitude and approach to inward investment. In fact, it's interesting to look at when you mentioned Brexit earlier there. Over 90% of people interviewed in Ireland recently saw themselves as benefiting by virtue of being a member of the European Union. And when you look at the translation of the value proposition that Ireland offers in terms of its education, its investment in infrastructure, its consistency of policy in terms of making sure that we approach attracting skills and have a borderless approach to worker movement across Europe, what you end up with is a consistent environment, one that investors feel that they can depend on.
Well, how are we going to prepare for the challenges in 2019? There clearly is a big benefit with being part of the EU.
Look, I think it's not so much just more of the same, but for example, there's going to be a quadrupling of the investment in capital spend from an educational point of view. We continue to invest very heavily in transportation and telecommunications. We're very, very clearly committed members of the European Union. Our relationship with the United States and attracting foreign direct investment into Ireland is without question. So I don't think that there's any question in terms of where we stand as an environment that can offer a consistent and reliable platform for US companies to invest not only in Europe but in the rest of the world.
Well, I think it's great that you're continuing to invest in STEM education, which is so key for those limited skill sets that are out there, but you also have infrastructure investment. And here in the States, we understand that, particularly in the New York metro area, where you need to have reliable services and utilities.
Absolutely, and technology is what drives the future growth in business. And one of the key attributes of Ireland's ability to stay ahead of the curve is focusing on next wave technologies. So artificial intelligence, machine learning, robotics, blockchain, analytics in particular, cyber technology, cyber security, all part and parcel of what are now baked into the Irish educational system. The emphasis on making sure that we have not just available but redundant, resilient telecommunications that go directly into Europe and directly around the rest of the world is absolutely key.
Well, the elephant in the room, of course, is Brexit, right? Before we get into what some of the implications can be, do you think it's going to happen? I mean, there was another deal proposition written last night, and it still kind of looks like Plan A.
I suppose, Jill, it's easy enough to take a flyer on this and say, it will or it won't. I think that nobody would have anticipated that we'd be where we are now, pre-June 2016. I do know a couple of things that are absolutely certain. One of them is that we're not returning to a hard border between North and South Ireland. I do know that the Irish government and Ireland is absolutely committed members of the European Union. I do know that it doesn't benefit Ireland in particular, and we would much rather that it not happen. I know that a lot of people are putting a lot of investment into it, and the British Parliament have a big question to answer and big hurdles to jump, but they're working hard on that.
Right, well, I do not envy Theresa May's position right now. That's going to be incredibly difficult to manage, but if Brexit does in fact go through, you think the Irish economy can weather this uncertainty?
Absolutely, and not only do I think it, but I know that Irish government plans at the moment are well advanced in terms of commitment to additional infrastructural investment in, for example, roll-on, roll-off access directly to Europe. UK has always acted as a land bridge for many of Irish exports, but the truth is that there'll be a transitionary period, as not, and the investment in infrastructure and the investment by the government in setting aside specific funds to support Irish industry that trade primarily with the UK, for example, is well advanced. The UK is our third largest market in terms of destination, so we don't take it lightly at all. Undoubtedly, it'll have an impact on GDP growth, but Ireland has sustained itself for the fourth year in a row as the strongest GDP growth in Europe. So I've no doubt in the world this, like many challenges in the past, we will be able to manage it.
All right, and we look forward to talking to you as this process plays out. Thank you so much, as always, for joining us at MarketSite.
Thank us for having you.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.